Hello, this is Dave, and welcome to Equity Story. Obviously, this is just a general share advice and not personal advice. I'm here with the Wolf, and as you know, Wolf is one of the greatest fundamental analysts in Australia, possibly the best. But unfortunately for him, he identifies as a chartist at the moment. But he's confused, but that's life.
That's okay, but I will discuss a pretty interesting case study today. So it just shows you how brilliant I am.
All right, and Wolfie.
Mm-hmm.
Let's go through some of the stocks that put out some announcements today.
Yes.
We can have a little mention GNC, liking the look of that chart, Wolf, and obviously the presentation came out. So, you know, it's just in the right space, the right time. One of the war stocks looking good, and you know, this sort of price action. If it looks like this by the end of the week, Wolf, this looks like it's going to go for a nice little run higher.
Yeah, 100%. It's pretty well poised. We know the issues with Ukraine and Russia and the grain story over there, right? We're having trouble getting out of Ukraine. So it's still going to be at the forefront of everyone's thoughts.
Wolf, SGM, Sims Metals, actually had a beautiful run earlier. It's come back down, hit trend. I thought the announcement was reasonably positive, but just, you know, they're a bit cagey, weren't they?
They were cagey, but also the market is very cagey. You know, when you look at what SGM is trading on, I'm looking at right now 8.6 times PE, dividend yield of almost 5%. I think, you know, if you are looking at a decent space that's maybe got positive tailwinds behind it, you'd be probably buying this, right, on the back of that reasonably okay announcement and its financials, because the financials look pretty good. So you've got well, I'm going to leave that to you, because I'm going to, again, turning into a chartist, I'll leave the things to you, but you could easily make a case for a nibble here with a view of bouncing back to the $20 market.
What look on it as basically a dividend play at 5%.
Yeah, absolutely. Exactly.
Is that gross, that dividend, Wolf? Or?
Yes, it is. It's grossed up to 4.7, so it's almost 5%. But it's still decent. And the thing is, they could easily surprise on the upside again at August time, right? Because they have been doing that the last couple of times.
So interesting idea, SGM. Possibly a dividend with a little bit of growth.
Exactly.
Okay, we'll leave that to people. They can have a look at it if they want to. If they did want a tight stop on it, they could go for around that sort of 17.39 as well, which would be give them a bit of security. Wolf, egg growing nicely at 20% a year. The chart's not quite there. It's very lightly traded, this company. What's your take on it?
Again, I like a lot of companies in the tech space, but I'm just not prepared to really put my foot into it as yet. Especially when, you know, things like eggs and so on, because they are lightly traded, they could be easily pushed around, and I just need more time to be comfortable that they are investable again. So I will talk about one in a moment that I thought it's showing you the signs that probably, you know, maybe in the next 3 months it could be time to get into the story. But I'll talk about it after we go through all these announcements this morning.
ALX takeover offer, Wolf.
Yes. So IFM, which is a big infrastructure player, I think they also own some infrastructure asset in Poland, Dave. I've been reading about them. I think they are Port of Gdańsk and so on. So it's a really big conglomerate. Taken a 15% of ALX at 8.50, I think, in the 8s. So what's next? That's the question next from, I think ALX said, guys, well, IFM has taken 15% stake, but we don't know what their intentions are from here. Do they, you know, what do they want? So I think what we're going to be waiting for is some answers from ALX and IFM over the next coming days. Okay,
interesting developments there, Wolf. Money 3, sort of weak looking chart, Wolf. Whatever the announcement was today, I didn't read this one. The market hasn't embraced it. What was your take on it?
I think it was positive. You know, this is the thing. It's not my favorite company. It's in the financing car loans, right? So, but when you look at the numbers, and I was reading the numbers from yesterday, that the second-hand cars are still going incredibly strong. In fact, rose again. The prices of you never thought secondhand cars will rise in value, but they have been doing that for the last 12 to 24 months because of the problems with the backlogs and getting the new cars over to Australia, right? So it's been a very, very tight car market in Australia, which meant car prices have been rising. So MNY should be doing well. And by definition, today's announcement, they are doing quite well, but the market is just not prepared. Let me have a look at the numbers they're actually trading on, just to give you a bit more perspective on what's actually happening with Money3. Like I said, it's maybe not the best quality company in the world, but again, under 10, so 9.97, dividend yield of 8.76. You'd be thinking to yourself, God, if I wasn't a chartist, I'd probably be having some for the dividends, just for the dividend.
I'll see if I can make an excuse to buy it.
Yeah, go on. You can't.
Hard, Wolf.
This is hard work, isn't it? You're thinking to yourself, my God, this looks good. Doesn't say so on the charts. Maybe we need to brainwash you not to become a chartist.
Okay, Wolf. You've got a very natural stop. There is actually a trend line there at $2. You have got to stop at 2. What's that dividend again?
Almost 9%. That's fully grossed up. Can you make a case in any way, shape, or form, or not?
Well, obviously it's not charting, Wolf. You're looking to try and pick a bottom. I mean, basically you'd say 1, 2. I think it's obviously going to flirt around this sort of $2 for a while. Yeah.
I think okay. Maybe I can help you out with this, right? Because you're obviously thinking, can I make a case for this? If we have a recession with what we're coming in, maybe it's not a great space to play with these sort of stories. Let's just pass it. Well, come back in a month's time.
I think you've hit the nail on the head, because there's all these stocks looking like great value at the moment. Yeah. But the caveat is, if we have stagflation, we go into a recession. It's not going to be so pretty.
Yeah, they might look expensive in 6 months' time. So maybe let's just pass it for the moment. What looks attractive valuation-wise? Let's look at it again in a month or two.
CHL had a good announcement, Wolfie. But again, sort of, hang on, let's get them off that, get them back onto a weekly. As you can see, looking like finding a little bit of support, this story at $2. What do you reckon about this one?
Oh, it's growing beautifully. It's probably one of the beneficiaries post-pandemic, where everyone's starting to travel, and we've seen a lot of traveling in the countryside in Australia, and now going overseas, of course. So the numbers were impressive, I have to say, today's update, and maybe that $2 is a nice thing. But again, it's in the tech space in a way. Is the recession going to hit them? Maybe. So again, you just don't have a conviction to buy any of these things, especially when they're trending under trend. So watch list it. Let's see, revisit it in 3 months' time.
All right, there's some interesting stories to the watch list anyway. Wolf, now you look at the banks, and you got NAB down, breaking trend. You got CBA down 2%. You got ANZ down 2%. You got Westpac down a whopping 4%. So you look at this, and historically, interest rates going up, good for banks. They can bigger margins, but we've got a problem here, right? So explain to us. We talked about it this morning. What is it?
The problem is the rate of the quickening cycle, by the looks of things, right? So it's like, just imagine, you're a walker, and you love walking, but all of a sudden you have to run. It's going to probably be, you're going to be puffed out. You're going to go, oh my God, this is too much. And this is probably what's going to happen with the banks here. When things go too quickly for them, it could lead on to much higher funding costs. Then it leads on to higher interest rates at a much quicker pace. It could lead to a recession, which we just talked about, right? And possibly problems with the mortgage market, which is a big part of their business. So I think the market said, okay, guys, we like their interest rate rises, but not at this pace. We are going to be on the sidelines for the moment and just wait to see how it maybe pans out over the next month or so. So traditionally, yes, banks would probably do well in a rising interest rate cycle. But I think it spooked the market at the actual quickness of it. So I can understand, imagine banks normally have the time to just, shop around for funding options. So all of a sudden they are pretty much pushed into, hey, the funding options are actually going up significantly quicker than we anticipate. We got to grab something quick. So potentially that's going to be a negative for them.
Yeah, and you can look at the charts. They're struggling a little bit, all of them. I mean, apart from CBA, they've largely all gone sideways anyway for the last sort of 20 years, Wolf, haven't they? So maybe
right. It's not as if it's a great story to have in the long term. It's more of a dividend play, right? And we're thinking about in this market, in a rising to it actually makes perfect sense to have it as a bit of a dividend play. But right now, when this cycle is actually quite quick, just be wary. Wait for the bottoming of these things, and then maybe look at getting some.
Well, yes, it's definitely it's an ugly sell-off, Wolf, and maybe if you look historically, it's not how we trade Equity Story, but around between this $15 and $20 mark, long term has been a good time to get in and nibble some of these. And I think you do have to look at these banks slightly differently than the rest of the market. It's very sort of secure businesses with a very safe dividend. Yes, the dividend obviously could be reduced if they have problems, but that's why I think long term, if you can buy them at the bottom range of their cycle, or bottom range of bottom of their ranges, maybe it's something that we could it's well worth having a look at.
That's why there's no rush into the banks at the moment, I don't think.
Yeah, and you look at sort of around that 22 for NAB, maybe could be the bottom of its range. So yes, possibly some ideas there, Wolf. But yeah, just definitely not at the moment. You had some NTO. Obviously,
let me go through. This is the case study that I wanted to talk about to everyone, right? Where we're looking for control in place. We found 3 so far, right? We're looking at, but the tech space. I'm obviously always interested. It's always going to be something that I want to buy some stuff over the long term. But I just wanted to quickly, just at least put these thoughts in your heads for everyone out there. That's the sort of setup we like to see. We've got a story that's really come down from pretty high, so $4 down to $1.43, and it's forming a base, right? So it's been smacked around the face so hard, Dave. It doesn't matter how far the market falls; it's still holding on, right? It's just immunity. It's been so bashed up that it doesn't matter what the market does. It's still holding on in a nice range and forming a base. So that immunity gives me a bit more confidence that we've probably found the bottom for NTO. And then we look at the actual financials of it, right? We're looking at that it's actually trading under 5 times revenues. And it is a story that's, the reason why it's been hit is because it's still a significant loss-making business. So we're looking at the commentary of the business. Where are they heading? So they said they want to become cash flow positive or neutral by the second half of 2023. That's not that far away, right? You're looking at 12 months, roughly. So it sort of gives you a timeline where we think we're looking at this story, because it's a good story, because it's still growing at 20% odd, right? It's not as if it's stagnant in a shape or way or form. So for me, it's got the right characteristics here. If it can demonstrate that it is narrowing its losses down to that neutrality, we're probably going to start looking at this seriously and probably buy it when it crosses certain thresholds, Dave. And I'll let it for you to talk about that. But fundamentally, that's the sort of setup I'm looking for. I'm looking for stability in a share price. I'm looking at, are they still growing? What sort of cash position they've got? And I think we talked about 70 million in Australian dollars. That should last them probably another 12 months. And like I said, growth, yes, tick. Are they recurring revenues? Yes, that's growing, tick. So there's a lot of ticks boxes in there. We're getting close.
Yeah, and I agree, Wolf. And but just technically, I think it needs to do a little bit more. And you look at that and you think, technically it needs to get over that 150. But you also thinking this could be sideways for a lot longer. And maybe that trend line that the one we follow is going to come down even further. So But just on your watch list, Wolf. Just
Yeah,
get on your watch list.
I mean, like I said, we like to see, and the thing is, this is another lesson, is not to catch a falling knife, because the market will give you an opportunity to get into a story once it stopped falling. This seems like it stopped falling now, right? You've got that range between $1.15, I think, to $1.50, and like you said, you could see this keep in that sort of trending range for another 6 months, for example, and it's possible. So we're not jumping at it; we are just watch listing it and seeing when is the time to get into it. And it makes a very good case for me to show you guys what I'm looking at a possible contrarian at a later stage.
Wolf, and obviously the war stocks are all looking very, very good today, all up pretty nicely. I think standout maybe is STO. Beautiful little breakout, and we are trending this one at the moment, and I think we've gone long on it to about 980, but you know, it's going to give us a good chance to lift our stop loss up. But the way this is looking like at the moment, I think certainly lifting that stop loss somewhere around the 845 would be an excellent idea.
Yes, look, one of the best looking charts. This is a wood breakout here, so I like it. I like it a lot, and especially when you put it on as a buy signal on the weekend. It's just like, it was like heaven.
Yeah, and WDS as well, Wolf. What a good looking chart that is. Absolutely superb.
Yep.
Wolf, have a quick look at the Einstein, see what they're up to, so we can have a see if they're I mean, they should all be looking reasonably good. And gone too far. Dave, what are you doing? Apologies. So many charts here to have a look at, Wolf. So yeah, listen, the buy signals, STO starting to go through. I think Fortescue looking pretty good, starting to go through. Rio, likewise, gone through that buy signal beautifully. Obviously S32, hot stock going through that buy signal. CIA up 4% again. Yeah, I would love it to break above 8. I think it'll look good. I think the best buy signal we had was nice little move at SLX, Wolf. Moving up absolutely beautifully for us. The uranium was up. It's up 6% so far this week. And you can see, no wonder BOE had a nice little move today, up 10%, Wolf. Looks excellent. You know, the coal stories, obviously Worley, but no, not too bad at all. ALD, I think we lifted the target price up to 37 or 38, and again, good price action today, so they're all looking good. Again, another uranium age looking pretty good on the charts. Yeah, generally speaking, Wolf, little food stories, BFC, look at that, gone on with it absolutely beautifully, hasn't it? AHF, what are they doing? Not too much. You'll still be holding them though. But yeah, Wolf, good to see Einstein's sort of giving us some, hopefully some places we can scalp some money off a very, very difficult market.
Yep, agree.
On that note, Wolfie, thank you very much. Absolutely brilliant advice as normal. And when are we going to see you in a shirt, Wolf? Will that ever happen?
Never. I know you're trying to force me to wear some, uniforms and stuff. No.
Well, you can wear a dress now. The world's different. You can wear a shirt or a dress. I don't mind if you want to wear one of your dresses.
Can I wear my PJs? I think that's the fashion going on at the moment. People going out in the streets wearing PJs.
No, I'm happy. Honestly, listen, that's fine. You could just put one of your dresses on. That's fine.
No problems.
You got to be honest, Wolf. All right. On that note, thanks, Wolfie.
See you guys.
Yeah, mate. Bye.